Today we're going to be diving into the AI No Stress FX MT5 by Ms. Maria here. This video is sponsored by our free Golden Time Bomb Expert Advisor. Take your trading to the next level through automating the London breakout and the opening range breakout. Click the link in the description to download the EA completely for free. So this is a pretty interesting bot because the sales page is very descriptive, almost floral, but there's not a ton of information about the exact strategy which it is running. So like many bots in the MQL5 marketplace, they're putting the word AI in there, or the letters AI, to give a kind of allure or sophistication to it, but doesn't exactly explain how she's going about implementing AI or LLMs into her bot. Like typically, if you're using AI, you use it with a particular purpose. Like I like to use it for sentiment analysis, so effectively reading the news and using that to filter out certain types of trades. I know the AIQ uses it often to adjust the stop loss, which is a very sophisticated method of risk management. Some bots use it more to kind of scan social media and look for, I don't know, let's say if Donald Trump tweeted or did a Truth Social post as an additional filter. So when somebody just says AI, but they don't give a ton of context, quite often it's more so just being used as a marketing term. But really here, what she's saying is that this bot is intended not to have insane returns, but to have slow and steady gains. And certain things which she's mentioning is saying that like it doesn't try and force trade, it simply observes, recalculates, and reacts on its own timing. Once again, this is kind of like a description which clearly has been written by ChatGPT. A lot of developers in the MQL5 marketplace seemingly are now having their sales language written by an AI model, and that could be maybe the only use of AI here. And here she's saying that it's using adaptive delay matrix, notices area of calm and historical volatility, dynamic order mapping, and chill guard system. So once again, like that, none of this really means anything. It's just like jargon and word vomit, which is meant to seem sophisticated. So that isn't exactly a great sign. Here we're saying that apparently it's placing limit orders, so I wouldn't be surprised if it's more of a mean reversion system. So they're placing limit orders at the highs and the lows of a given range. Looking at the signal, because we're not getting a ton from this page, we can see that it's trading gold. And if we look at the actual equity curve, it's not a perfect straight line, but there appears to be, it's relatively straight with a few dips and slight drawdowns. So the equity curve is actually looking pretty decent, but it is trading gold. So I'm a bit curious as to how they're running more of a mean reversion style system on gold in particular. We can see here is that it's not also like a night scalp or anything, because it seems to be running at just about every time during the day. And that's what I have found the only way to make an effective mean reversion system on gold is typically to do it in more of a night scalping or evening scalping context. So that's not what we're seeing here. And we're seeing an inverted risk reward with a positive win rate, which is what we would expect to see for this type of more scalpy style system. So honestly, the signal doesn't look bad, but the description doesn't give us a huge overview as to what it's actually doing. And yeah, I guess that's all we have to work from here. And I'll go and I'll kind of walk over to MT5 now. So nothing else here. It's just showing that high profit factor, daily average profit is super high. Without knowing the initial balance, that's not super helpful to us. And if we look it up, you can see that I've taken the liberty of downloading a backtest. When I ran it, there was clearly something grid martingale-esque going on, and we can see that here. So I'm quite glad that it's not being manipulated. So I had thought something similar, because instead of opening it doing some sort of lot scaling, they seem to just be using a grid system, or more like a lot scaling system, through the use of additional orders. So let's go back to the signal and see if we can ascertain that. Here we go. So what I'm looking for here is to have a bunch of orders which are closing at the same time. We can see here, for instance, a good example. So sometimes instead of scaling the lots, what they'll do is they'll just keep opening more and more positions. And the kind of the telltale sign there is that it's a mean reversion system, and if price goes against you, they just start opening more positions in the direction of which price is going against you from. So let's say you went short initially, and then price keeps going up. You just keep short, with the hope that eventually it turns around. And that appears to be what she's doing here. And yeah, we can see it again here. We have a double here, and then here's a big one. 1, 2, 3, 4, 5, 6. So yeah, classic, not quite grid martingale, but it's a form of grid martingale. And every time that the equity's been dipping, and the reason why we're seeing such a straight-ish signal here, and some detachments of the equity from the balance line, is usually that form of some sort of lot scaling. And this is also being done in a mean reversion setting, or like a semi-mean reversion setting. Actually, kind of. It's more like a semi-trend following semi-mean reversion. So it's going short, but then as soon as price goes against it, it keeps shorting more and more and more. So they're looking for pullbacks within the broader trend, I think. Because here, for instance, we're still in an uptrend, but then here we're shorting and we're in clearly an uptrend. So yeah, like this is not like, it doesn't look blatantly manipulated or like a history reader, but this bot will blow up. Ultimately, running this type of, like, any sort of lot scaling semi-martingale system on gold is a terrible idea, because gold is so volatile, it can just jump massively, or you can have a CPI print and it can blow up. It's too volatile for this type of system. If you like grids, you want to run it on Aussie dollar, New Zealand dollar, Aussie CAD, maybe a USD pair if you're feeling particularly gutsy that particular month. But yeah, this is some form of lot scaling, just increasing positions as opposed to increasing position sizing, and that's just done as a fairly sneaky way of hiding a grid martingale. And as we can see, like, this bad boy was released on, let me check the exact day, the 7th of June. We are now the 21st of June. Let's look at the back test here, and lo and behold, that would be the end of May. So roughly once you stopped developing it, we can see that it's going from up and up and up and up to pullback. So that's not a good sign, and we're typically the end, right after they've launched the bot, all of a sudden we're losing money. Typically not a great sign. And here we can see that, like, yeah, we're starting to take losses the later we run it from. So this system won't work. It's been over-optimized on historical data, and it's using a recovery mechanism of sorts. This is not a good bot. It will blow up long term. Granted, I have to give her credit that it's not a scam. Like, she is clearly showing the system. There is some degree of strategy here, but unfortunately this strategy just won't work. And the only reason why it's not showing a totally blown equity curve is heavy degrees of over-optimization. So yeah, guys, not a great bot. I'd stay away. There's plenty of other good ones, and hope you enjoyed the video, and I'll see you in the next one.